Hi, I'm Tore Steen, co-founder and CEO at CrowdStreet. The commercial real estate market is a $7 trillion market. It's the third largest asset class in our country, behind stocks and bonds. Every year, there's $500 billion of transaction value that happens in the commercial real estate industry, and $260 billion of that is done on the equity side of things. Let's take a quick look at how people invest in commercial real estate today and what their options are. They can invest in a private REIT, which is usually through a financial advisor, through one of their broker-dealers, which results in usually a high fee structure. They can purchase public REIT stocks and be beholden to the stock market, as well as lower returns because they're investing in a company that owns the real estate. If they're lucky, they get invited to the party, if you will. They get a private transaction where they know the developer in their local region. So that's limited access. And ultimately, the final way that they could do it is they could actually purchase the asset themselves, which is obviously a high capital intensive thing. So what this means is today, to invest in real estate, it's inefficient, it's costly, and it's difficult, which is amazing, being the third largest asset class in our country. So when CrowdStreet got started a few years ago, we wanted to change all that. Luckily, there was some regulatory change that happened in 2013 called Title II of the Jobs Act, which opened up the ability for general solicitation of securities offerings. Enter CrowdStreet, which is here to change the game of investing in commercial real estate, to make it more transparent, to make it more accessible, and to make it more efficient. So what CrowdStreet offers today, and we've been in existence for over 4 years since that launch, is a publicly available marketplace. So everybody here, I invite you to go to crowdstreet.com, register, and learn more about investing directly into commercial real estate. We have 30,000 registered investors. We're growing by over 1,000 every month. And we've had over 160 offerings on our marketplace that's raised over $200 million in equity. We also, in 2015, took the technology that's the underpinnings of our marketplace and white labeled that to offer it directly to commercial real estate developers and operators to use on their own website with their own investors. And today we have over 150 customers. This is just a glimpse at what the marketplace looks like. As you can see, it's pretty straightforward. It allows investors to peruse different offerings that have different asset types, different geographies, different investment profiles. And they can build their diversified commercial real estate profile at minimum investments of $10,000. They also, as they build that portfolio, they obviously need to manage that portfolio as they're getting distribution checks and realizing their return. So we have a portfolio My Investments opportunity for the investors. Ultimately, the sponsors, the commercial real estate developers and operators, they love this. They are getting more access to investors and capital beyond their geographic region. Many of the investors already have a stable of high net worth investors that they've worked with for years. I like to call it the country club money. Now they're able to meet investors across the country. Their project might be in San Francisco, New York, Chicago, LA, Portland, Oregon. Yet they can have investors across the country investing with them through an online medium. And ultimately, we provide that technology and that software and put it in the hands of these commercial real estate developers so that they can manage investors more effectively in a more modern method. CrowdStreet, since its public launch of the marketplace in April 2014, has seen extraordinary growth. We've listed over $5 billion of project value on our marketplace. We've, as I mentioned, raised over $200 million of equity on the marketplace today, and we're gaining on 60,000 registered investors. We've been blessed to have some great customers along the way. Today we have 150 customers, and we're doubling in size year over year on our customer base. And what's most important is we're getting great feedback from both sides of the marketplace. We're hearing from high-quality commercial real estate developers who are moving online, who are realizing the power of going direct to a retail investor and how efficient it can be. And investors are reaping the benefit of getting access and transparency into an asset type that for so long has not been transparent, has not been accessible, and has definitely not been an efficient process. Again, Tore Steen with CrowdStreet, and at this point I'll open it up to some questions.
Great. So Anju, we'll start with you. Any questions?
Thank you. Two questions. One is, how do you source and screen the properties you list? And second, is it only crowdfunding, or do you also have a debt fund to co-invest?
So on the first question, we have a rigorous screening process. I have an investments team made up of individuals, analysts, and investment managers who have years of experience in private equity real estate, and they screen the sponsors, they screen the deals and the returns that are being offered to investors. And we have an objective. We actually, again, around the transparency, we list this all on our website so that investors understand the 3 steps of the screening process, which includes full background checks on the sponsors themselves. We don't, I think the second part of the question was around the debt side of things. We are focused on the equity side right now. There are some players that are disrupting and transforming the debt side as well.
So I was curious, do the developers or sponsors just kind of use this mechanism to top up, if you will, versus 100% of the funding for a property?
So it's a great question. So today, on average, the CrowdStreet marketplace portion of the equity tranche is only 28%. So it is definitely, I guess I'd use the term top up. It's a supplemental piece, and it's a really way for them to expand and distribute their offering online and to grow their investor base at the end of the day. You know, many of these sponsors have investors that are aging, and they're looking to kind of replenish their investor base, and this is a really effective, efficient way for them to do that.
And then in terms of liquidity from an investor perspective, does it look like a REIT in terms of that, right? Every day I can go sell my shares, or is it, yeah, you got to wait for another investor to come along and fill in your gap?
Good question. It's very much like what's done in the private world, so it is not a liquid asset. There are rights to sell your units because it's usually in an LLC, but it's not a publicly traded security, so there isn't an actual market for it. Now, stay tuned because you can probably see where this is going. There will be potential secondary markets and opportunities to bring in a liquidity factor to it.
Are you entirely white label, and where do you plan to go from here?
In terms of our software, like our marketplace?
Yeah, your marketplace.
Yeah, so our marketplace today, it's very focused on commercial real estate on the equity side, and so that's what we're really sticking with our focus. And again, the white label software that we provide to developers is great because it helps them, again, manage. Now that they're in an online world, there's going to be a lot more investors. It's kind of like e-commerce in the early days when they had to, use software to manage all those new consumers.